progress.
Good afternoon, everybody. Welcome to Paul's Monday Market Update number 173 for Monday, 10th of February 2025. I hope you're all well. I hope you've enjoyed the weekend. I hope you've enjoyed the continuing Trump trade tariff shenanigans, okay, which we'll get more into later. As always, if you're joining us here for the live session, if you can just confirm that you can hear my voice and see the slides, that would be a great start for us, whether you're joining us here on Zoom or on the live stream as well. You're all very welcome. Fabulous, thank you. For those of you joining us for the first time, Paul's Monday Market Update is literally just that. It is me flying through as much as I can share with you over the next 25 to 30 minutes, looking at strength and weakness within FX and indices and commodities markets. I look at a few charts of interest and then a look at the live markets. It's not a signal service. It's not a trade recommendation service. It is literally just me sharing what I'm looking at, which may be of help or assistance to yourself. As always, you're always very welcome here, but just remember that you are always responsible for your own trading decisions. And as always, just further insight, if you want to watch a couple more webinars this week, you'll find that at 2 o'clock London time every Monday Market Matters webinar for active trades. Okay, you can register on their website or on that QR code. Today, the education element will be a look at what asset classes should I trade. And also I'm providing now a Market Pulse, a weekly update webinar, London time, 7 o'clock every Wednesday. You're very welcome to join us either once again on the QR code or on that bit.ly code that you can see there, 7 o'clock every Wednesday. Okay, let's dig into the main element, to the main thrust of the session. So I appreciate if you're new to trading or if you're new to joining us, this might maybe look a little bit intimidating or overwhelming, but it's not. It's just really some elements that I take out of my own piece to basically to effectively share with you. Okay, it's what I bring out of my own model in an effort to basically share with you, to give me an indication of where's the strength and where's the weakness in the markets for the week ahead, so that I can allocate my time, energy, and resources more effectively going forward. So, what's this telling us, and how can we use it to help us? Well, invariably, what we're looking at here is that here we are into week 7 of the year already. Where's the strength? Where's the weakness? But what we have seen is Japanese yen has kind of just stolen the top spot from the dollar, which has slipped down into the second place. Now, part of that is, I think, is some of the shenanigans that we saw last week. Okay, where the tariffs were on, they were off, they were on, they were off, and then of course that has accelerated this weekend with Mr. Trump's comments yesterday about how he was there was effectively going to be I think it's a 25% tariff on steel and aluminum imports into the US. Okay, coming on pretty much effectively, and that has had an impact on markets as well, as you can probably well expect. So I think I said this about a week or two ago, is that it now makes holding positions over the weekend a little bit sporty, shall we say, because as you can see, the last 2 weekends, or Mr. Trump or other elements have released news, okay, over the weekend, and that has had an impact on markets, and we will look at that in a moment when we switch to the live chart. But invariably, it is going to be, let's say, a little bit turbulent, okay, for the next couple of weeks, as the new administration find their feet and set out the stall. You might say they've actually done a pretty good job of that already, but invariably that has had those impacts on markets. So this is why keeping on top of your risk management is always key, but also keeping on top of the news flow, the order flow starts to become unbelievably important. All right, just to basically help give you an idea of how to navigate through these eventful times. But as I said, yen has taken the top spot, okay, and dumped a dollar off it. But certainly in the last kind of since markets opened last night, okay, yeah, yen has come off its peaks there. But we're going to look at the yen in a short while anyway. And in fact, actually, what we can see is that Aussie started the week on the front foot against everybody else. But as I said, I think as the details and the data come out, not only about the tariffs, but also some of Trump's comments that might allude to the treasuries, US treasuries. I think as there's some little bit of clarity and let's say counter offer comes out over the next sort of 24, 48 hours, do not be surprised if this swings about a fair bit. Looking at the other side of the pile, well, not unsurprisingly, Kiwi dollar remains sort of kind of bottom of the pile, which it has done, as you can see, has done for months and months and months now. More probably interestingly is euro, which from being number 2 a couple of weeks ago has dumped its way down into the bottom of the pile, and we saw a continued sell-off of that on at the end of last week. Once again, some of those kind of comments about Mr. Trump, really, he's coming for the EU basically. And that has kind of scared people off. And as I said, we might, if we have time, we'll have a little look at the euro prices, etc., to see how that is reflected in those markets. Close to home, sterling is just fair to middling. All right, okay, just mincing around in the middle. And as I said, we'll look at the charts there in a moment to have a look at sterling. We always finish on sterling, okay, just as closest to home to have a look how that's playing out. But as I said, it's in the middle of the block. Okay, it's neither strong nor weak. I suspect, if you were to hold a gun to my head, I'd say it's more towards the weaker end of the STAM than the strength. But invariably, that shouldn't really be a shock to particularly to anybody. On the flip side, what we see, Canadian dollar, had basically literally from the week before had dumped to the bottom because, of course, the initial trade tariffs were talking about hitting Mexico, Mexico, Canada, and China. But then invariably they got after a little bit of a powwow on the phone. Then invariably they got put back by a delay for 30 days, and that had an impact on CAD, which we will see when we look at one or two of the charts later. So no shock there. And as I said, I think I said this last week, is that this is going to be Mr. Trump's negotiating style. If you didn't think he would act like this, well, then you're just being naive. All right, he's a negotiator. That's what he is. He's a businessman. He's a negotiator, and so he basically likes to play it as if he's almost like playing high stakes poker. Now, you can love that, you can loathe that, you can say it's right, you can say it's wrong. You can debate that, as long as you want. The reality is that's the way he's going to act. All right, and so you'd be very foolish not to sort of take that into consideration when you look at what the score is, and in terms of how markets are going to be. When I just look at the particular markets themselves, what I see there, okay, in terms of STAM environments is pound and euro are very much in kind of stand-on selling environments, and that's not a massive shock. It's more a case of, well, how do I take advantage of that? When I look at indices, quantities, when I look at things like Dow, S&P, etc., they are providing me with strategic buy opportunities. But if I'm honest, I'm kind of countering that a little bit at the moment, based upon just my common sense and intuition, looking at the charts themselves. Once again, we've got an interesting week, all right, okay, in terms of the data. We had NFP data last week, which was good, but some would say good, some would say mixed, but pretty much people have forgotten about it already because they're already focusing on Trump's comments over the weekend. As I said, that's the world we now live in. But this week we've got a fair bit. I think the big data point for this week will be American CPI, which is on Wednesday afternoon for ourselves. We've got like UK GDP on Thursday morning. That will be interesting based upon, last week we had we had Bank of England cut interest rates, and Mr. Bailey, who is he's actually speaking. Yeah, he's speaking tomorrow lunchtime. Mr. Bailey, who I would describe him as kind of like pro-Reeves, pro-Labour, and even he was struggling to say anything positive, okay, in his press conference, all right, last week, and I think that's just a reflection of weakness in sterling, people's view that if we're not in recession, we've only escaped it, by a technicality. And the likelihood is that we are more likely to see us moving towards recession as the year goes on, especially once we see the data come into play for Q1 of this year, and also once we start getting the effect of those national insurance contributions and the changes there from April, etc. I think that's going to have an impact. So I think Q2 for the UK is going to be rather challenging. But listen, you trade what you see. All right, you trade what you see. So there is a little bit of a mixed picture, but as I said, I think that will get mixed about even more when we start to get clarity on some of those Trump comments. All right, so it's like that old Chinese saying that may you live in interesting times, and I think it's fair to say we most certainly do at the moment. Okay, so with that in mind, let's have a little look at some charts of interest. So these are just a few charts I put up every week that just ultimately we're all traders and investors. We can be fascinated by looking at charts. There might be an opportunity, there might be something to learn, there might be something you just want to add to your watch list. This is the Thomson Reuters commodity CRB index. Okay, and why am I putting that up? Well, because we are living in interesting times, and that we have seen great dollar strength. Okay, over the last 4 months. Since basically the end of Q3 last year, and we've also at the same time had seen some commodity strength, the right strength in some commodities. So, for example, gold, which we'll look at in a moment, and weakness in other commodities. Okay, which we'll look at in a moment. But the CRB index is a great way just to almost like take the temperature, a bit of a snapshot of overall supply and demand for commodities. Okay, and this is a weekly chart of it. And you can see going back, a couple of years now, we've pretty much been in a range between 260 and 300. But over the last couple of weeks, we've started to break out of that. Okay, not unsurprisingly, we kind of reversed here at sort of end of September, start of October last year. Linked to a little bit to the kind of dollar strength, but also the change in the world, really. And we've broken out of that. Okay, we've broken out of that, and we're holding above. For the last few weeks, we've been holding above 300. Okay, which is an indication. Of course, we're seeing rising commodity prices, which we have in a few commodities, and is that an indication of what else is going on? Because sometimes the, let's say, the correlation between the dollar, commodity prices, and also what we're about to look at, the emerging markets, sometimes that correlation is very, very clear, and and it's enormously helpful if you swing trade dollar, swing trade commodities. Okay, it can be very useful. But we're seeing this kind of strength here in that commodity index, all right? And as I said, we only have to look at price of gold and also, silver in the last couple of weeks and a few of the others, okay, even oil, in terms of to give us an indication that those commodity prices have been rising, and this is basically, giving us a little bit of backup to do with that. When I look at another chart here, this is EEM. Okay, so it's the iShares Emerging Markets Index Fund. Okay, and it once again, it's a weekly chart, gives a bit of an indication. Now, normally what we see is, historically, normally what we've seen is really good correlation between dollar strength and the emerging markets. Right, so. Emerging markets, okay, normally they're exporting their commodities. That's what gives them some strength. But equally, the debts are the debts are priced in dollars as well, right? So very often the debt's priced in dollars. So of course, if the dollar is strong, that weighs on the emerging markets because invariably they're having to spend more on debt repayment than on their own domestic plans. All right. So there's normally, we have seen, especially over the last few years, really good, strong correlation between those swings in the dollar and also the EM chart. What interests me is that, as I said, we've just looked at commodities. All right. So the commodities are strengthening. Not unsurprisingly, what we actually have seen is, we saw kind of in the first part of last year, we saw basically some of that kind of strength in emerging markets because the dollar was weakened. But then, as I said, once we sort of turned into the kind of end of last September, start of start of calendar Q4. All right, just in the run up to those US elections, what we saw was dollar strength, and we'll look at that in a moment. But you can see how that has impacted basically on the emerging markets. Okay, there's been a drop there from just over 47. We've traded as low as just under 41 there, and that sort of kind of is that confirming that kind of dollar strength. But I'm kind of starting to look, that we're building a bit of a broadening formation there. Okay, on the weekly chart, a bit of a broadening formation there. Is that also a reflection of markets and individuals being worried about, or they're just nervous and anxious about what Trump is doing? Because when we look at the dollar index chart in a moment, we will see that is reflecting that. Over the last couple of weeks, we've really sort of seen real kind of shifts in the dollar. Yes, overall it remains strong, but certainly over the last week there have been some real strong swings in dollar, back and forth, which shouldn't really shock anybody, okay? But as I said, for the world we live in, but ultimately we want to just try and understand it if we can, and find a plan to either basically mitigate the risk or take advantage of it. So, as I said, this is always a good chart to watch and keep an eye out. For those of you who've been here before, you'll know that I always start to get a bit curious and interested when I start to see you've got a broadening formation, but also look at price and the moving averages. They're all starting to coil up. All right, this is all starting to coil up. All right, normally this is the calm before the storm, and you've got all those moving averages. You hear me say it all the time. It's like price is coiling up. Price is it's like trying to force two north ends of a magnet together. Okay, they just repel and push each other apart, and that's what we see there. And then it's a case of is this what we're experiencing now? Right, this is just the whole world is changing a bit to get used to Mr. Trump, and invariably, prices are coiling up before they explode outway. So, as I said, you've seen the CRB breaking out to new highs. You've seen basically EM has weakened, but is now coiling up and getting ready. And then, as I said, the dollar charts have been interesting over the last week. So for me, it looks like it's all getting ready to make its next move, and so we just want to be prepared to run with that, whichever way it particularly works. Sometimes it's very clear, other times it's not. For me, it's not necessarily that clear at the moment, so I'm very happy to let the market do its thing, and then I'll look to sort of trade the trend after it. But after that, let's have a little look. I think I've just got a couple of tech stocks, okay, just to get back to the normal stuff. So Google, here we go. Alphabet, all right. It's always going to be Google, isn't it? Nobody calls it Alphabet. Here we go. Weekly chart. Listen, that has, for the most part, like most of those other Mag 7 tech stocks, it's been a lovely trend, hasn't it, for the last couple of years? That's what you want to see. Price making higher highs, higher lows, okay, respecting the moving averages, bouncing off them nicely, giving you an opportunity to sort of get back in on pullbacks. But why are we interested? Well, last week they reported their earnings. The earnings, in particular, were a little bit of a consternation, shall we say, for some of the market participants, in particular some of the kind of revenues with their cloud business, and of course that didn't. The markets didn't react well to that in a week that was already a bit volatile. But the reason I'm interested now is look at the price action from last week. Okay, after a very long, strong uptrend, that is, to me, that is a bearish key reversal. All right, it's a bearish key reversal. Price pushed to new highs, but rolled over and closed beneath the low of the previous candle. That's a key reversal candle. Okay, it's a bearish engulfing candle. Some people would look at that. Either way, I wouldn't exactly say that's entirely positive. All right, in terms of I wouldn't exactly say that's bullish. When others tech stocks, so for example like Meta and others, Plantier last week we looked at, they've been on a tear. The same can't be said for Google, and you have to wonder, are they going to be the black sheep of the family at the moment? So I'd be looking to see how do we play out this week? Do we drift our way down to the 50-period moving average, all right, around about the $175 to $180? Because we've done that before. Very nice bull flag there. Excuse my drawings. I'd call that more of an extended channel than a bull flag, but nonetheless, it ended with a kind of nice bounces of the 50-period moving average. That's what my scenario will be. See, does price drift its way down to there? And if so, what does it do? All right, once it gets there. So that would be my scenario, my plan for Google at the moment. And another final one before we look at the live charts, Microsoft. What I'd say is yes, that had been a nice trend. That had put in a great move. But equally, what I'd probably say is that after topping out last year, we've kind of just kind of, I'd say we've gone sideways. Excuse my drawings. You might say, well, actually, Paul, are we not sort of just getting into a bit of a triangle, which would normally be a continuation pattern? Okay, so the trend would continue in the pattern you come into it. As I said, I'm a better trader than I am an artist, so excuse my artistry, but you get the gist, don't you? But once again, we had some interest in some very bullish, regardless of the shenanigans, some very bullish price action last week on some of the tech stocks, but I think it's clear to say not so much on Microsoft. Okay, and once again, that to me is a very bearish candle. Okay, it is. I would call that a bearish pin bar. It is engulfed the previous candle. Okay, even though the body's not, but because the body's at the bottom, it's pretty bearish to me. That now. And once again, I'd say this kind of, I'd be looking at this. I think we've talked about this in the past. $400 has acted as pretty much support level, neckline, call it what you want. So, as a short-term trader, what I'd be looking for is for it to drift back to that area. Okay. And then once it does, once again, it would not surprise me if we got back to there. We had an initial bounce, and then basically, if we roll over back towards the 200, that would be my bearish analysis based upon this price action at the moment. So, what I do with these things is, I just create myself a little scenario, a little plan. If it plays out, I'll play it. If it doesn't, I either replan or go elsewhere. Okay, that's the way I work. And because it's on weekly charts, it gives me an opportunity to just do a bit of that work at the weekend. I don't have to sit there and watch every tick. It just allows me to sort of build a plan. And as I said, plan my trade my plan. If the plan plays out, then I trade it. If I don't, as I said, I'll either replan based upon what the market's telling me, or I'll just go elsewhere and do nothing. So there you go. You might want to add that to your watch list to see how that particularly plays out over the next couple of weeks. All right, so there you go. That's charts of interest over. Let us switch across to the live market. So if you just bear with me for a moment, that's what we'll do. So just bear with me a second. We'll get rid of the chart, see what we can bring up here. Okay. Okay, so once again, as I said, I'm hoping that you can still hear me, hoping that you can see the charts now. So this is my one of my index profiles. Okay, so what have we got here? What's this showing you? So we've got Dow, Nasdaq, SP 500, Russell, oil, West Texas, DAX, Nikkei, FTSE. Okay, these are all on the hourly charts here at the moment, and you can probably already see what's been going on. So what I'm interested in is that from here where we closed on Friday, we gapped down a bit like last weekend. If you remember, we gapped down, but actually we've pretty much already filled that gap. We filled that gap within the first hour on the electronic contracts overnight from the Asian trading. Look at it. All right, bosh. Now, what can that, DAX actually even gapped up, what can that tell us? All right, even Nikkei and FTSE, well, as FTSE was, nice this morning, but what can that tell us? What can we learn from that? Is that a case of markets are just already getting used to? Well, yeah, this is Trump. He basically he tries to fire off his shotgun, and then basically, it gets deflected or defeated, or basically swerved, very very quickly by other countries or blocks or market participants. Is that a case of it that basically already, even though we'd gapped down, just look at that on the day, even though we'd gapped down, we had we've been bullish here. Now, of course, that could of course change at the market open in in about sort of just over 90 minutes. Of course, that could change, but what we're looking for, how are the market reacting? All right, this is we're in Trump's world. All right, we're in Trump's world, and what I'm always intrigued to is he's going to say stuff, he's going to do stuff, but actually, how does the market react? That ultimately is all we really care about. How does the market react, and can I turn that from a threat into an opportunity? So, at the moment, that's all a bit of a kind of a bullish start to the week in the sense of markets kind of erasing those raising those comments, as I said. if you remember last week, there was absolute pandemonium from, the Asian Open, all right, until the end of like maybe the European session. And by the end of that day, almost, a lot of those gaps had were almost filled. And it happened even quicker this week. So as I said, maybe that's just the market sort of just taking on board and getting used to life in Trump world. But all that means is that we're going to get that kind of data, all right? We're going to get the reactions to that data. So, of course, when we get CPI Wednesday afternoon, I'll be intrigued to see, how much credence the market gives it. Has the market sort of switched back from focusing on sort of jobs? Is it going to start switching back to a focus on inflation? A lot of that will depend upon those CPI numbers on Wednesday. So, you want to keep on top of that. Listen, let's have a look close to home. FTSE continues, all right. FTSE continues to play. We had like 9 months of just moribund markets, and we've broken out of it, and we've continued, all right. We've continued to work our way up the 4-hour chart. Look at last week, we gapped down. We kind of pivoted around that 50-period moving average, and then Bosch filled the gap, carried on, pulled back. I'll be interested to see, do we basically get an opportunity to fill that gap there itself, to see how that particularly plays on and stuff. Yeah, you're welcome, Daniel. Thanks very much for joining us. Okay, and stuff. Yeah, those are all good. So, we can see that basically what's been going on there. If you're a long-term swing trader, you might find it a little bit, you might find it a little bit challenging, all right. But if you're a short-term trader, being able to sort of just watch and take advantage of these moves is quite, it's quite fascinating for us. But whilst all this stuff goes on, what we want to see, of course, is bang, here's gold on the weekly chart. It's been in a great trend. This was, a continuation pattern. Clearly our triangle. At this time, I thought maybe this is a lower high and will roll over, but it didn't. It didn't roll over. And as you can see, the 20 acted as dynamic support, and we've just boshed. And there we go. We traded through. We've traded through. Look at that, the daily chart. We've traded through 2,900 there. Okay, this morning. Go to the hourly chart. Bosh. Just look at that. Bosh, look at that. That's beautiful. That is just, that's just the daily for the last 5 weeks there. That's just been breaking out of that and then just going into a nice, nice uptrend, all right? Higher highs, higher lows. You hear me say it all the time, when there is a nice trend like that, okay, why would you fight it? All right. Why would you fight it? What you want to do is find a way to sort of to ride that. Silver, it has been in the same, isn't it? It has been not as strong or as pretty or as clean as the as gold. But if you remember, those of you joining us every week, we talked about this at the end of last year, double bottom off the 50, and then if we go down to the daily chart, we grinded our way, all right. But this at the end of last month, okay, this was in particular was just being supported off 30, and we've run up there. Friday's price action was a little bit I was curious about it because it basically, the kind of highs that we'd put in for last year, or the first highs last year, we were kind of respecting it a bit. But you can see for yourself this morning, look at that, for this morning silver, even though the Friday price action was a bit a bit struggling, bang, this morning has just been pretty much all bulls, Asia and Pacific, and into Europe and stuff. That's just been bullish all the way through there. All right, let's have a look at. We'll have a look at dollar. I appreciate we're going to probably overrun just a little bit. Just as I said, always just trying to share as much as I possibly can with you, trying to fly through as much as we can look at to get a bit of insight. And there's a lot more to cover because, of course, we're engaging in interesting times in markets at the moment. So this is my bang. That's the stamp, but that's let me just just confirming the end strength there. Bang, this is my dollar profile, dollar index, weekly chart. As I said, this is where we, end of Q3, start of Q4 calendar, ran up there, okay? And that's, as I said, had an impact on the CRB index we looked earlier and the EEM. But then, we've just, the price action there isn't terribly pretty. I would say that, we haven't broken the structure of the weekly chart, okay? On the daily chart, well, I look at that, but that was an evening star. We come back to the 50. We gapped up there, but it was a lower high. And, now we're just a bit caught, right? I'd say we're just a bit stuck. Yes, this week, the 4-hour chart, we have started, we've levels, all right? We were above the 50, we've filled the gap, etc. And the gap was minimal compared to what we had last week. Look at that gap there, gap up there, and then, as I said, as those tariffs got walked back, bang, you can see what that did to the dollar. So, as I said, watch to see over the next 24 hours, what kind of news we get coming out to give us an indication of the what's really happening, what's really going on, and how that's going to affect the dollar. Remember, as we said last week, tariff generally good for the dollar initially on the short term, or removal of tariffs, poor for the dollar. And so we're going to have to wait and see what kind of political chicanery goes on over the next 24, 48 hours to see how that particularly plays out. So there's plenty to see there. That there's we normally go through a lot of the dollar, but last week was just pretty bit of a shenanigan week, and we're going to just have to sort of watch how that plays out. Let's have a quick look here. What have I got here? Euro charts on the daily. So euro dollar, euro sterling, euro Aussie, euro CAD, euro Kiwi, euro Swiss, euro yen. There we go. Okay. Euro weakness, yen strength. That's not a massive shock there. Okay, a little bit of a euro weakness, dollar strength, even euro sterling. Okay, even though it tried to bounce, we've just basically still continued that kind of euro weakness, sterling strength. Euro Swiss franc, that continues the euro weakness, even though the price action isn't exactly fabulous, but it is. And even Kiwi dollar. All right, Kiwi dollar this month. Look at that, euro weakness, Kiwi dollar strength. Remember, Kiwi dollar's been bottom of the STAM. Aussie, euro, Aussie this month, okay, euro weakness, Aussie strength, Canadian dollar even, all right, euro weakness, Canadian dollar strength there, all right, that's telling you all you need to know about, what the market is worried about. Again, market is worried about European markets anyway, but then invariably also Trump's comments about he's going to come for the EU next, and then these tariffs and stuff in terms of not only steel and aluminum, but the effect that has on cars, etc. I think we can see that the market is just basically not terribly happy about that, is it? So you can see that euro weakness there. All right, let's finish off with sterling. Don't want to overrun too much. Let's finish with sterling. As always, have a little look, see, is there anything really we can tell us now? After the start of the year with a great deal of sell-off on sterling, which was fabulous. If like me, you were short sterling. This is cable on the weekly chart. That is, in many ways, you'd look at that as a morning star, which is normally bullish, but what you can see is 125. Look at that, 125. It's that kind of line in the sand, all right? Support here, resistance here. If you look at it, interestingly, I just see that now. We've got 125 above. This is the daily chart, the daily 50, the 20, okay, the 20 period moving average, which was resistance and has now turned to support. And now I'm just going to watch, are we calling up? Is it a case of Bailey's comments and CPI data on Wednesday and UK GDP data on Thursday? Are these going to be the sort of things that basically we see price coil up before it breaks out? So I'd be watching that, okay, over the next 48 hours and stuff to see how that particularly plays out for cable. Pound against yen on the weekly chart. This is the weekly chart. I see that we're just basically broken out of that. It's too big for a pennant. I'd kind of call that just a bit of a triangle, a bit of a wedge, but you can see how it's broken down there. And if I go into the daily chart, really, if we look at, that was the start of the year, that high there, where the high there, 197.16, and we've traded as low as 187. So, we've pretty much lost 1,000 pips, all right, in sterling again over the last month, all right. That's the way I'd look at it. And that is just basically sterling weakness, yen strength, all right, yen's top of the pile. That's what we're looking for. Pound against Swiss franc, well, just look at that. Those of you join us every week, I've just been talking about how look at that. It's just pivoting around there, that 50-20. That's just enough to drive anyone mad. If you're trying to trade a trend, you ain't getting it there. But if you're a range bound trader, if you're short, sort of intraday, trader, scalper, there's pieces to take. But if you're a swing trader, that's a tough couple of months. There's not getting any joy there. Interestingly, right, pound against Canadian dollar. It has been messy, all right, but we had a great trade off the bump, off the bounce off the weekly 50. It was a great trade, and there was early entries on the daily and the 4-hourly charts into that. But then you can see last week, bang, this was a gapping up on the Canadian tariffs, and then actually as that got walked back, you can see the impact that had basically on, kind of a relief rally in Canadian dollar, and the effect of how that has affected the sterling. So there was a great long here, but actually we've just fallen all the way back there, right? So, my view would be that I would be watching, even though I'm expecting sterling to be weak, I would still be watching how what goes on with Trudeau and Trump, right? Any kind of comments out of that is going to have an impact on Canadian dollar. Okay, all right, ladies and gentlemen, let's draw it to a close there. I appreciate we overran a little bit, but yeah, as I said, we're in interesting times, and there's lots for me to sort of share with you. I hope you found that useful. I hope that just gives you a little bit of insight, a little bit of help. As I said right at the start, we're in interesting times, so make sure you're managing your risk. Make sure you're on top of news flow as best as you can be. Make sure you're understanding the order flow. Okay, where's the strength and weakness in an effort to help yourself navigate this week. Just one final little bit of comment. There will be no Monday market update next week. Okay, so we will return in 2 weeks' time. I think that's the 24th. I think. So no Monday market update next week. Return in 2 Mondays' time. For those of you on VTP, I'll see you later. For the rest of you, have a great trading week, and I look forward to speaking to you soon. Take care, everybody. Cheers.